In the ever-evolving landscape of exchange-traded funds (ETFs), the YieldMax Coin Option Income Strategy ETF, ticker CONI, stands out as a unique offering. By actively harvesting income from the underlying Coinbase Global Incorporated (COIN) stock through a covered call strategy, CONI presents a distinct proposition for investors seeking to navigate the cryptocurrency space with a focus on steady income generation. However, peeling back the layers of this instrument reveals intricate dynamics and strategic nuances that merit thorough examination. This article delves into the intricacies of CONI, analyzing its investment thesis, underlying mechanics, potential benefits and drawbacks, and overall suitability for various investor profiles. Demystifying the covered call playbook. At the heart of CONI's operation lies a fundamental financial strategy known as covered calls. This entails selling call options on the underlying asset, in this case, COIN, while simultaneously holding long positions in the underlying itself. These call options grant the buyer the right, but not the obligation, to purchase the underlying asset at a predetermined price, strike price, by a specific expiry date. In exchange for granting this optionality, CONI receives a premium upfront, boosting its immediate income. The crux of the covered call strategy lies in its risk-reward profile. By effectively selling upside potential in exchange for guaranteed income, CONI aims to provide a buffer against significant downturns in the underlying asset while capturing consistent income regardless of price movements within a certain range. However, if the underlying asset rallies beyond the strike price before the option expires, CONI forgoes any additional gains beyond the strike price, capped upside. A closer look at CONI's DNA. Beyond the covered call framework, understanding CONI necessitates a closer look at its specific execution and underlying holdings. As an actively managed ETF, CONI's management team, YieldMax ETFs, employs its proprietary coin option income strategy to select call options with varying expiry dates and strike prices. This dynamic approach seeks to optimize income generation while managing risk and dynamically adjusting to market conditions. A key aspect of CONI is its heavy allocation to U.S. Treasury notes. As of January 3, 2024, these notes accounted for nearly 85% of the ETF's portfolio, serving as a source of additional income and contributing to overall risk mitigation. This conservative allocation also serves to dampen the volatility of CONI's price compared to its underlying asset, catering to income-oriented investors seeking relative stability. Weighing the scales, potential benefits and trade-offs. For investors seeking consistent income streams and capital preservation, CONI offers several potential advantages. Regular income generation. The covered call strategy employed by CONI aims to generate regular income through the upfront premiums received from selling call options. This income stream can be particularly attractive for investors seeking to supplement their existing portfolios with dependable dividends. Risk mitigation. The heavy allocation to U.S. Treasury notes provides stability and downside protection, potentially mitigating the volatility associated with the underlying cryptocurrency asset. Alternative to direct coin exposure. For investors hesitant about direct investment in the volatile cryptocurrency space, CONI offers a way to gain exposure to coin's potential upside while potentially limiting downside risk and capturing regular income. However, it's crucial to acknowledge the potential drawbacks of CONI. Capped upside. By selling call options, CONI forgoes any potential gains beyond the strike price if the underlying asset appreciates significantly. This trade-off might not be ideal for investors seeking aggressive exposure to potential crypto growth. Fees and expenses. Like most actively managed ETFs, CONI carries an expense ratio, currently unavailable, that deducts from its overall returns. Investors should factor in these fees when evaluating the fund's net performance. Complexity and market dependence. understanding the nuances of covered calls and their dependence on market dynamics requires a certain level of financial sophistication. Investors should thoroughly research the strategy and its potential implications before investing. Finding the right fit, tailoring CONI to investor profiles. Ultimately, the suitability of CONI depends on individual investor objectives and risk tolerance. Here's a breakdown of potential fits. Income-oriented investors. For investors seeking to generate consistent income from their portfolios, CONI's focus on income generation could be an attractive option. However, they should be comfortable with the capped upside potential and understand the underlying mechanics of the covered call strategy. Risk-averse investors. The combination of income generation and a conservative allocation to U.S. Treasury notes might appeal to risk-averse investors seeking exposure to the cryptocurrency space with mitigated volatility. Strategic portfolio diversification. For investors seeking diversification and an alternative to traditional asset classes, CONI could offer a unique proposition. However, they should remember to view it as part of a holistic portfolio strategy and manage their overall risk exposure accordingly. Navigating the CONI landscape, performance, comparisons, and future considerations. Having shed light on the core mechanics and potential of CONI, it's critical to delve deeper into its performance, compare it to alternative options, and ponder its future prospects. Performance under the microscope. While CONI launched relatively recently insert launch date, its initial performance offers insights into its effectiveness. Analyzing its track record against its benchmark, if available, and relevant market indices is crucial to assess its return generation capabilities and risk profile. Additionally, evaluating its historical income distribution could provide valuable information for income-seeking investors. Beyond CONI, exploring alternatives. To make informed investment decisions, exploring available alternatives to CONI is essential. Comparing its performance, fees, underlying holdings, and potential risks against similar covered call ETFs, income-focused vehicles, or even direct investment in coin itself can illuminate its relative strengths and weaknesses. Gazing toward the horizon, CONI's future landscape. Several factors shape the future landscape of CONI and the covered call strategy it employs. Cryptocurrency market dynamics. The volatile nature of the cryptocurrency market significantly impacts CONI's performance and potential upside. Closely monitoring market trends and understanding how they might influence option premiums and underlying asset prices is crucial. Option selection and management. The effectiveness of CONI's coin option income strategy hinges on the skill and foresight of its management team in selecting optimal call options with varying expiry dates and strike prices. Analyzing their track record and methodology for option selection can provide valuable insights for potential investors. Regulatory environment. Evolving regulations in the cryptocurrency space could impact the viability and legality of covered call strategies employed by ETFs like CONI. Staying abreast of regulatory developments and their potential implications is essential for informed decision-making. In conclusion, a calculated dive into the CONI pool. The YieldMax Coin Option Income Strategy ETF presents a unique proposition for investors seeking income generation and moderate exposure to the cryptocurrency space. Understanding its mechanics, potential benefits and drawbacks, and suitability for different investor profiles is crucial before diving in. By carefully evaluating its performance, comparing it to alternatives, and considering the future landscape, investors can make informed decisions about whether CONI aligns with their strategic goals and risk tolerance. Remember, the cryptocurrency market remains inherently volatile, and any investment, including CONI, carries inherent risks. Consulting with a financial advisor and conducting thorough research is always recommended before making any investment decisions.